At no point have I expected in my life I would be attempting to decipher a series of emojis to then try to infer potential trades by an online kind of Robin Hood Joker juxtaposition, our boy Roaring Kitty, obviously, to see what moves might be happening. It's absurd and I love it. It's hilarious. Now, I want to be clear, as I've said a bunch of times, I don't have the lore or the background that you guys do. I'm not going to pretend to. I'm actually going to spend very little time on this. I want to spend way more time looking at Siri, and I'm going to focus more on what I do, which is looking at the options markets and looking at the underlying itself. But this stuff is kind of funny. So there was a member from the Discord MP that was asking if I went over Siri, and I have not, but I'm happy to. And funny enough, I actually have a trade on in Siri that I took most of it down and left a little bit of it back on. But again, as per usual for me with this stuff, I had no idea that this was even going on. I simply saw it pop up on a couple of my scanners. So I established a position, very small speculative trade, take advantage of what looked to be a bit of a breakout. So let me show you what that looks like to start, which is on the chart. Basically, if I zoom this in from a 1 year to like a 3 months, I saw two things that really interested me. The first thing was here on the 21st of June, there was a massive skyrocket in volume for the underlying itself. So what that means is if I look at the day before, the volume was 38.8 million. If I look at the volume on the 21st, it's 330 million. Massive expansion. This triggered an initial alert for me. I get a lot of these, to be clear. It's not like each one of them is a unicorn and they all work out great. A lot of them don't. But I'm very willing to monitor products that make these kinds of movements because there's activity. And from an options trading perspective, volatility is my friend. Whether I'm buying options or selling options, I need things to move in order to make money. So when I see stuff like this, I'm interested. So this popped off, and what I did was immediately set an alert at this price level right here, the 298 handle. Now, this originally was screened out because it was sub $5. I very rarely will trade things that are sub $5. But when I saw this happen, I dropped this price alert. So I didn't buy or do anything here. And it was originally an alert that looks just like this. So I literally will set an alert that if there's a break above this previous level, and it was a little bit lower, it's like right here at like 295, right at the open, the previous open on this candle. And if there was a break above that, I just wanted to know about it. So what I get an alert on then is on the 2nd of July. And on the 2nd of July, we see a break above that was pretty consistent. And we still have much lower volume than we saw here, but much higher volume than average all the way over here. So what I do is I use this average volume to give me some context. It was skewed a little bit by this day, obviously, but because it was only 1 day, it came right back down. And the thing that really stuck out to me here, though, was the fact that this was overwhelmingly buy volume, both of these days. So as soon as I see a bunch of generally higher volume coming into the product, vast majority buy volume, I see a break above, this becomes a small trade for me, an asymmetric play. I want to take it to the upside, and I'm going to set a really tight stop. And in this case, the stop was 295. It was using this prior point of perceived resistance, now turned support. Again, I feel like with stuff like this, you have to be so careful applying standard technical analysis, but this is a much smaller subset of what I do as a trader, looking for anomalous things like this and mostly trading things like momentum, which this falls directly into that bucket. We start seeing some really strong momentum with a breakout. This is early stages though. So then we get a follow-on move on the 3rd. I end up exiting a good portion of the position there, and I have some runners that I left on. Now, those runners will essentially get stopped out at 3.5 or less, and that's it. They're just going to go do their thing. Now, what's going on here? I have no idea. there's a ton of speculation that Roaring Kitty's emojis translate this. Everybody was sure was the 4th of July from what I saw from people sending me things in asking what they thought 4th of July could have meant, because this corresponded with that well. Then there was a new theory that came out that this stood for America, and then this microphone stood for broadcasting, which is, if you look up theory, apparently on the Wikipedia page, it shows just like American broadcasting. So, okay, maybe that's the case. This is honestly one of the problems with attempting to interpret emojis to make trading decisions. It's not what I do, but I find it entertaining to look at. So I know a lot of people are curious, is Roaring Kitty now potentially building a position here in Siri? And a lot of people are going all over the place with this because Roaring Kitty's been radio silent since essentially, in terms of positions, since the 13th of June. So everybody's kind of speculating, especially after the Chewy movement and some of the movement that we're seeing here. Everybody's wondering what's going on and trying to figure it out, rightfully so, because it's very, very interesting. So if we take a look now at the options chains themselves, there's a couple things worth calling out here. The very first thing is this is a very small product. There's not a ton of expirations. There's not a ton of options. If we take a look at the total open interest across these very few expirations, it's over 800,000 calls to 570,000 puts. So to clarify what I said in case it was misleading, when I say that there's not a lot of options, there's a ton of open interest relative to the number of options available. Like if I open up this chain, there's a handful. You go from 0.5 to 6, right? So like in comparison, just for context, if you look at something like SPY and we open up the options chain, there's tons. And there's even, right, there's tons of options. So that's what I mean here when I say that there's not a lot of options in Siri, is that there's just not a ton of expirations. And within those expirations, there's not a lot of chains to pick from. Now, what I find interesting here is there are a couple very, very active chains, specifically individual strikes, that I think are worth talking about to a degree. Although when I look at this in a broad brushstroke, I don't see a lot of anomalous activity that would lead me to believe super informed, sized, convicted buying, meaning people like Roaring Kitty coming in and placing, because especially something like this, if you compare it to something like GameStop, where he was coming in with 5,000 lot, 10,000 lot pieces to establish his position, this is a fraction of the size. So you would have to be pushing some weight in order to get a meaningful position on in here. Now, that's from the options perspective. That's not to say that they're not shares transacting, because this is above average transactions. There's no doubt. Like even this, again, if we go back to kind of this pre-jacked up period here, we go back in here, it's like 15 million, 19 million. And then essentially from this point forward, it doesn't get below 30 million. So there's absolutely elevated stock transaction volume. But from an options perspective, I'm not necessarily seeing that, because even though that there's a lot of options relative to how few, or I'm sorry, a lot of open interest relative to how few chains and strikes there are to select from, there's not a lot of correspondingly large sizes. Because again, this looks like a big number, 820,000 calls, and it is a lot of OI. But you're talking about something that's trading for $3. So if you want to put on anything of size, you need to put on a ton of these. So let's take a look at some of the chains and then some of the individual strikes. What I do find interesting from the jump, I should say, take a look. This is 5 days to expiration. Take a look at how high the implied volatility is here. 195. Why do I find that so interesting? Simple. If we come over here and we take a look at something zoomed out a little bit more, there's earnings coming up on the 1st of next month. I would expect the expiration cycle that includes this to be the highest IV in the near future. I would expect this expiration cycle to be the highest. So if I go there, we know it's the 1st of August. So the very first expiration cycle that would include it would be the 2nd of August, which is a weekly. So maybe could have slid out to the monthly for more liquidity. Sometimes you'll see that happen where even though this contains earnings, the ones around it also can be elevated or even slightly higher if that's where people are going to play earnings. Not seeing any of that. I see 195 here, 166 here, and then it dumps to 145, 144, 133, 135. So if we check out the chain that actually has earnings in it directly, it's this one. It's only 144.66 compared to the next upcoming two in order, 12 July, 19 July at 185 and 166. That's big. Now, there's obviously a lot of IV in this front cycle because of this. This is a giant move. This is not a small move, even though it is a very small product. It's gone from 245 from the 13th of last month to 416 was the high it hit here. It's a big move. That is a big move relative to the size of this product. So the implied volatility for the expiration cycles is interesting to me, and this is abnormal for sure. I would expect the earnings to be much, much higher. Now, pivoting over and taking a look at the volatility smile for specifically the out of the monies, and let's use kind of these near two terms and then where we see earnings. A couple things. One, these are all jacked up. Normally, you don't see them crisscrossing all over the place like this. And what I can tell you is from the one that includes the earnings cycle, notice how high the put side is relative to the call side. This is an expectation of downside. If I go in here to the 12 and the 19 July, so for those wondering, it's the blue and kind of the pink, these two, they still lean very put heavy. So the market, as far as I can tell broadly, is pricing in downside. Then when I look at the transactions that occurred on Friday, I see a few things. I see the vast majority of puts transacted at the offer or higher, meaning we're buying puts, lots of them. And when I look at the call side, the majority, 39% to 36%, so a slight majority, are on the bid side, selling calls. So that still tells me we're looking a little bit more to the downside here. So what does this mean? Well, this pop, very interesting timing. And I also think some of this might have corresponded with a couple posts that were on Reddit. From the options perspective, it doesn't look super interesting. There are a couple heavy cycles, and I also wanted to show you this now that I became an affiliate with Unusual Whales because this is a little easier to use for kind of quick research like this. I still prefer pulling things down, dropping it in Excel or Google Sheets so that I can analyze it a little more in depth, but this is super useful to be able to check out something like that. So what I did is I just looked back essentially over all of last month and the beginning of this month. And I'm looking at things that transacted at the offer or higher, meaning that we're buying on the call side specifically. I'm looking at calls and I want premium that's at least $25,000. If it's under $25,000, it is, even this is low for me from identifying like big players that are trying to speculate here. So this is a low threshold. And the reason why I use a low threshold is so that maybe I can see if there's a bigger player that's entering with a series of these smaller trades. The way you can detect that is you can see when they're coming in, how close they are to one another, and you can pick up on buying patterns. You'll see centralization within the same strike. You'll see consistent sizing to a specific degree, things like that. So when I look at the buying activity essentially over the last entire month, the biggest trade that populates in here is this one right here at 195. So if we sort these instead by premium, there's not a lot of big trades. There's a 195K trade. This is not small, by the way. This is absolutely a large trade, no doubt. And this looks curious to me because it's way far out in time. So this is a long-term play. That's what this tells me. You don't go out that far at that size because it's not very liquid. Notice how wide that market is. That's crazy. 66 cents to 80 cents on something revolving around a 3.5 strike. That's wildly liquid. So they want leveraged exposure to the upside. That's what this is, no doubt. but it's all the way out in 2025. So they're giving it plenty of time to. In terms of the next largest, there's essentially a $75,000 position, much tighter, still very illiquid for the size of this product. But this is a little nearer term, but still pretty far out. So the vast majority of these larger trades are kind of spread across these different expiration cycles with some decent weight out here in 2025. But that doesn't bode well for what a lot of people are very interested in is what does this mean for me today, this week, coming up now? And as I look across all of this, again, not saying nothing's going to happen, I have no idea. But what I do know is the options chain right now isn't showing me anything that looks supremely interesting, anything indicative of strongly convicted upside bias trading. The majority of volume that we saw on Friday, today's the 7th of July, the majority of volume from Friday was actually trading it to the downside, looking to either buy puts or sell calls into it. So very interesting. Do I think that this is Roaring Kitty? I have no idea. From an options perspective, I would lean no, but from an equity perspective, potentially. But I have no idea. He seems really convicted around trading GameStop. And I had a long conversation with Richard about that not too long ago to understand his behaviors in terms of moving into other products. And it's not outside the realm of possibility. But right now, we have no way to know. We haven't seen any portfolio updates. We haven't seen any more filings outside of Chewy. So he's obviously looking at other things, but we don't know exactly what that buying pattern entails, other than the fact that I do think it's somewhat telling that when we look at this little chain and we had the dog emoji, then we see the filing for Chewy, and then we do see this. I don't think it's that far-fetched to assume there could be activity going on by him in there. I just have no idea. So I'm as eager to find out as you guys are, but my small contribution to the puzzle set would be from an options perspective. I don't see anything interesting to indicate to me that there's Roaring Kitty or really any other large player in there transacting. It would be more on the equity side that I could tell. And even that is relatively light for something that's so cheap, but who knows? So as always, if you have any questions or anything to add, drop it in the comments. Be an outlier. See you guys later.